From FXEmpire, this is Chris Lewis taking a look at the 2024 year for crude oil. In front of you, I have a weekly chart of the WTI or U.S. crude oil market. You can see that as we are getting ready to close out the year, we are finding support just above the $65 level. Above, we have 95 as resistance, and I think this ends up being your range for most of the year. The 200 and the 50-week EMA both pretty flat, and of course, you can see that there has been a significant amount of action around 65. So from a technical analysis standpoint, it all jives well. MBS and Vladimir Putin have met recently, and that suggests to me that OPEC is watching price. Will they cut production again? I don't know. If we start to fall, though, below 65, you can almost count on it. Because if we do that, then you're looking at a move to about 57 and I think ultimately about 45. And that would be too low for OPEC's liking. So what they do like is relatively stable pricing because then they can budget. A lot of those countries are almost solely dependent on crude oil exports. We have seen a significant sell-off since the Hamas attack on Israel and the subsequent Israeli occupation of the Gaza Strip. So what this tells me is the world is no longer worried about escalation. And that will be good for the oil market. So I think this is your range for the year. We are closer to the bottom than the top. I also could put in something akin to the fact of like using a stochastic oscillator. On a weekly chart, you can see we're kind of at the bottom of the range and starting to turn around. So I think the short-term pop probably going to be more due to the Federal Reserve pivoting to looser monetary policy in 2024, which also helps the idea of economic growth and crude oil demand. Again, if you're a range-bound trader, this is probably going to be an excellent market for you this year. You're going to have to be patient enough to wait on these areas. In fact, as I look at this, you can even make an argument that somewhere around 82 would be your like midpoint. A lot of times, let's do 82 and a half. A lot of times, these markets have outer, inner, and then there's like a fair value. So right around 82 and a half, it seems like there's a lot of support and resistance as well. So I think most of this year you'll be looking at stochastic on a weekly chart and placing your trades based upon this. Now, again, there's always outliers. If there's some type of economic calamity, it could send oil straight down. If the situation in the Middle East gets worse, it could send it straight up. But as things are playing out right now, it looks like you have about a $30 range for the year, and that's about normal. That's really not out of bounds of normalcy. You can see for 2021, we had 52 and 86, your highs and your lows. This was a pretty exciting year here, 2020, when we had futures dipped to negative that one day. $3 up to 64. That's an outlier, obviously. But you also have other years like 2019 where 42 and 65, so it was a little tighter. So this is kind of like run-of-the-mill, right down the middle type of action setting up, and I think it does make a certain amount of sense.